Good morning and welcome to Morning Markets. Today we're going to be focusing on the US and why we continue to see economic strength, as well as the latest interest rate decision from Australia. In last week's Morning Markets, we very much focused on the US economy and it continuing to display resilience through the labour market data which came through. Yesterday we had further data which supported this narrative through what is called the ISM Services survey data. Now this is widely followed. Remember, services contribute to more than 70% of the US economy, so it's important to keep an eye on how that's evolving. So the monthly survey which surveys businesses in the service sector saw an improvement over the month of January from December and actually came in better than expected, a signal that the sector is performing very well. When we look at the individual components, what stands out to us is the employment component continued to show improvements, expanding, and supports the data that we saw last week that businesses are optimistic about the future economy and therefore are hiring more than they're cutting jobs. Other components suggest that demand is also improving. When we look at new orders, that showed noticeable improvements, and as well as the delivery supplier times, that actually slowed, which is what you would expect when demand is increasing. Less encouragingly was the prices component that showed a noticeable increases in the prices that these types of businesses are facing, the largest monthly increase since 2012, and which may challenge the central bank's expectations and the market's expectations that inflation will continue to fall, and perhaps this suggests at a slightly slower pace than originally expected. However, what we would take away from this survey is that it continues to support the narrative that the US economy remains strong. How did the market respond? Well, it was most noticeable in the US government bond market, where you saw Treasury yields rise again following Friday's increase, which means that prices actually fell as the market begins to think that interest rates cuts may be delayed given the strength of the US economy. We also saw the US dollar strengthen again. Elsewhere, we saw the central bank in Australia give their update on the current environment and where they see the appropriate level of interest rates for the near term. Like the Bank of England last week, they left interest rates unchanged at 4.35%. Now, inflation has been trending well in Australia. It has been coming down. In the fourth quarter of last year, it fell more than expected, and it's at a two-year low of 4.1%. Remember, their peak was 7.8%. However, their central bank indicated that inflation wasn't falling at a pace that gave them confidence that they would be sustainably at their 2 to 3% target as they expect. So they actually indicated that interest rates could actually go higher if necessary, if the data supports that. So that's everything from us today. Thank you for watching, and we'll see you tomorrow.